Imagine our world as a vast neighborhood. In this global neighborhood, some families live in strong, comfortable houses. They have access to the best schools, modern hospitals, and stable jobs that provide for all their needs. Their children look forward to a future filled with opportunity and promise. Clean water flows from their taps, electricity powers their homes day and night, and well-paved roads connect them to markets and cities. This is the reality for what we call developed or high-income countries. They have built robust economies and strong institutions over many decades, creating a high standard of living for most of their citizens. However, in this same global neighborhood, many other families live in very different circumstances. Their homes may be fragile, unable to withstand storms or floods. Their children might have to walk many miles to reach a school, which may lack books or even qualified teachers. When a family member gets sick, the nearest clinic could be hours away and may not have the necessary medicines. These are the developing or low-income countries, where poverty is not just a lack of money, but a daily struggle against immense challenges. It is a cycle that is incredibly difficult to break without outside help, trapping generations in a state of hardship. The gap between these two worlds is one of the most significant challenges of our time. It is a gap not just in wealth, but in opportunity, health, and security. A child born in a poor, remote village in sub-Saharan Africa has a vastly different set of life chances than a child born in a wealthy European city. This inequality is not just unfair, it is also a source of instability for the entire world. Poverty can lead to conflict, disease can cross borders, and environmental damage affects us all. Closing this gap is therefore not an act of charity, but a necessity for building a more stable, secure, and prosperous future for everyone. The fundamental question then becomes, how do we connect these two worlds? How can we help the families in the struggling parts of our global neighborhood build stronger foundations for themselves? It requires more than just good intentions. It demands a coordinated, large-scale effort that brings together resources, expertise, and a long-term commitment to change. It requires a powerful institution designed specifically for this purpose, to act as a bridge, channeling support from the wealthier parts of the world to the places where it is needed most, empowering people to build better lives for themselves and for generations to come. In the aftermath of World War II, as nations lay in ruins, global leaders came together with a bold idea. They recognized that extreme poverty and economic devastation were not just local problems, they were threats to global peace and stability. To rebuild and prevent future conflicts, they created new institutions to foster international cooperation. One of these was the World Bank. Its original purpose was to help rebuild the war-torn countries of Europe. But over time, its focus shifted. It turned its attention to the much larger and more persistent challenge of global poverty, becoming the world's leading organization dedicated to development. The core mission of the World Bank Group today is simple to state but incredibly complex to achieve: to end extreme poverty and to boost shared prosperity. This means two things. First, it aims to reduce the number of people living on less than a couple of dollars a day to almost zero. This is about ensuring everyone has the basic necessities for a dignified life. Second, it works to increase the incomes of the poorest 40% of the population in every developing country. This focuses on reducing inequality, ensuring that the benefits of economic growth are shared by everyone, not just the wealthy. To understand the World Bank Group, it is crucial to see it as more than just a bank. It is a unique global partnership. Its owners are its member countries, nearly every nation on Earth. These countries work together through the World Bank Group to support development projects and policy reforms in poorer nations. It provides a platform for the world to collectively address challenges that no single country can solve alone, such as climate change, pandemics, and food shortages. It operates on the principle that a healthier, more educated, and more prosperous world is a better and safer world for all of us. The organization is not a single entity, but a group of 5 closely related institutions. Each part has a specific role, working together like the different departments of a large company to tackle development from various angles. One part might lend to a government to build a new highway, while another helps a small farmer get a loan to buy better seeds. A third might ensure a foreign company that wants to build a factory, and a fourth might help settle a disagreement between an investor and a government. Together, these 5 parts form a comprehensive support system for developing countries on their journey toward a more prosperous future. The World Bank Group is made up of 5 distinct organizations, each with a specialized function. Think of them as 5 different tools in a single toolbox, each designed for a specific job. The first, and oldest, is the International Bank for Reconstruction and Development, or IBRD. The IBRD provides loans, guarantees, and expert advice to middle-income and credit-worthy low-income countries. For example, if a country like Brazil wants to build a large-scale solar power plant to provide clean energy to its cities but lacks the full funding, it can turn to the IBRD for a loan at a favorable interest rate, along with technical expertise on how to manage such a massive project successfully. The second pillar is the International Development Association, or IDA. This is the World Bank's fund for the world's poorest countries. These nations, such as Mali or Bangladesh, often cannot afford to borrow money even at low interest rates. So the IDA provides them with grants, which are gifts of money that do not need to be repaid, and 0 or very low interest loans. This support is vital for basic needs. For instance, an IDA grant might be used to fund a vaccination program for children across an entire country, or to build primary schools in rural villages where none existed before, giving millions of children their first chance at an education. The third organization is the International Finance Corporation, or IFC. While the IBRD and IDA work primarily with governments, the IFC focuses exclusively on the private sector. It believes that a strong private sector is essential for creating jobs and driving economic growth. The IFC invests in private companies in developing countries. For example, it might provide a loan to a technology startup in Kenya that is developing a mobile banking app, or it could invest in a company in Vietnam that is building affordable private hospitals. By supporting these businesses, the IFC helps create jobs and foster innovation from the ground up. Finally, we have 2 smaller but equally important institutions. The Multilateral Investment Guarantee Agency, or MIGA, acts like an insurance company. It encourages foreign companies to invest in developing countries by providing them with insurance against political risks, such as war or government seizure of assets. This makes it safer for a foreign company to build a factory in a country perceived as risky. The 5th pillar, the International Centre for Settlement of Investment Disputes, or ICSID, serves as a neutral referee. It helps resolve legal disputes between foreign investors and host governments, ensuring that both sides are treated fairly and that disagreements do not derail important development projects. To truly grasp the impact of the World Bank Group, we must look at its work on the ground across different sectors. In education, for example, the goal is not just to build schools, but to improve learning. In Morocco, an IDA-funded project provided performance-based grants to schools that improved student retention and learning outcomes. This initiative gave schools the resources and incentives to hire better teachers, purchase new textbooks, and create a more engaging learning environment for students. The result is a generation of young Moroccans who are better equipped with the skills they need to find good jobs and contribute to their country's economy. In the realm of public health, the World Bank Group has been a critical partner in fighting diseases and strengthening healthcare systems. During disease outbreaks like the Ebola crisis in West Africa, the bank quickly mobilized emergency financing to help affected countries pay for healthcare workers, medical supplies, and public awareness campaigns. Beyond emergencies, it funds long-term projects to build hospitals, train nurses, and ensure that clean water and sanitation systems are in place to prevent the spread of disease. A project in India, for instance, helped expand access to basic health and nutrition services for millions of women and children in rural areas. Infrastructure is perhaps the most visible area of the World Bank's work. Good roads, reliable electricity, and modern ports are the backbone of any economy. A country cannot trade its goods or connect its people without them. An IBRD loan might fund the construction of a major highway in Colombia, reducing travel time between a farming region and a port, which allows farmers to sell their produce to international markets at a better price. In another country, like Nigeria, a World Bank project could focus on rehabilitating the power grid to reduce blackouts, enabling businesses to operate more efficiently and children to study at night. The World Bank also plays a crucial role in helping countries manage their natural resources and protect the environment. It recognizes that sustainable development is the only path forward. In Vietnam, the bank has supported projects to protect coastal communities from the impacts of climate change by restoring mangrove forests, which act as natural barriers against storm surges. In the agricultural sector, it helps smallholder farmers in countries like Ethiopia adopt climate-smart farming techniques. These methods, such as better irrigation and drought-resistant crops, increase food production while conserving water and soil, ensuring food security for the future. When a developing country needs to fund a major project, like building a national power grid or modernizing its ports, it has several options. It could try to raise the money from private banks. However, commercial loans often come with high interest rates and short repayment periods, which can be an immense burden for a country with a tight budget. This is where the World Bank Group offers a powerful alternative. Its loans, particularly from the IBRD and IDA, have much lower interest rates and very long repayment periods, sometimes stretching over 30 or 40 years. This makes financing large, essential projects affordable and sustainable for developing nations. But the support from the World Bank Group goes far beyond just providing money. Equally important is the world-class technical expertise that comes with it. When the bank finances a project, it brings a global team of experts, engineers, economists, education specialists, and environmental scientists to help design and implement it. If a country wants to reform its education system, the bank can share lessons learned from similar reforms in dozens of other countries. This global knowledge base is an invaluable resource that helps governments avoid common mistakes and adopt the most effective solutions for their specific needs. Furthermore, partnering with the World Bank sends a strong signal of confidence to other investors. When the World Bank Group agrees to finance a project, it conducts a rigorous assessment to ensure the project is economically sound, environmentally sustainable, and socially responsible. This thorough vetting process acts as a stamp of approval. It tells private companies and other international organizations that the project is well planned and that the country is committed to good governance. This often encourages others to invest alongside the bank, bringing in even more capital and resources than the bank could provide on its own. Finally, the World Bank provides a steady, reliable partnership that extends over the long term. Building a nation's capacity is not a short-term task. It takes decades of consistent effort. The bank works with countries to develop comprehensive, long-range development strategies. It helps them build strong, transparent institutions, fight corruption, and improve how they manage their public finances. This sustained engagement helps create a stable and predictable environment that is essential for lasting economic growth and poverty reduction. It is a partnership built on a shared vision for a better future, not just a one-time transaction. A common question about the World Bank Group is who owns it and who makes the decisions? The answer is simple: it's member countries. The World Bank is not a private corporation. It is a cooperative, much like a credit union, where the 189 member countries are the shareholders. Each country contributes capital to the bank and in return has a voice in how it is run. This structure ensures that the organization remains accountable to the global community it serves. The amount of a country's financial contribution determines its voting power, which means that larger economies like the United States, Japan, and major European nations hold more influence. Decisions at the World Bank are made by a board of governors, with one governor representing each member country, typically the country's Minister of Finance. This board meets annually to decide on major policy issues. For day-to-day operations, the governors delegate authority to a smaller group of 25 executive directors, who are based at the bank's headquarters in Washington, D.C. The 5 largest shareholders, the United States, Japan, Germany, France, and the United Kingdom, each appoint one executive director, while the remaining 184 countries are organized into groups or constituencies that elect the other 20 executive directors. This system ensures that all regions and perspectives are represented. The president of the World Bank Group is responsible for its overall management and is selected by the board of executive directors for a 5-year renewable term. By a long-standing tradition, the president has always been a citizen of the United States, the bank's largest shareholder. This individual chairs the board meetings and oversees the bank's staff, but does not have a vote on project approvals or policy decisions. All decisions to approve loans or set policies are made by the executive directors, representing the collective will of the member countries. This governance structure is designed to balance the influence of larger economies with the voices of smaller and developing nations. This model of shared ownership and decision-making is fundamental to the World Bank's legitimacy and effectiveness. It means that when the bank supports a project in a developing country, it is not an outside power imposing its will. Instead, it is a decision made by a global body of which that country is a member. While there are ongoing debates about reforming the voting structure to give more power to emerging economies like China and India, the cooperative framework remains the bedrock of the institution. It ensures that the World Bank Group acts as a truly global partner, working for the shared interests of all its members. In our deeply interconnected world, the idea that any nation can prosper in isolation is a fantasy. The challenges we face today, from climate change and pandemics to financial crises and forced migration, do not respect national borders. Poverty in one region can fuel instability that affects the entire globe. In this context, the World Bank Group is more important than ever. It stands as a powerful testament to the idea that global cooperation is not just a noble ideal, but a practical necessity. It is the primary instrument through which the world can pool its resources and knowledge to tackle its biggest shared problems. The ultimate goal of the World Bank Group is to help countries build the capacity to stand on their own feet. It is not about creating a permanent state of dependency, but about fostering self-sufficiency. By investing in education, health, and infrastructure, the bank helps create the conditions for private enterprise to flourish. By offering technical assistance and promoting good governance, it helps countries build the strong institutions needed for long-term stability and growth. Every successful project, every child who receives an education, and every new business that creates jobs brings a country one step closer to a future where it no longer needs to rely on external aid. Looking ahead, the World Bank Group's role will continue to evolve. It is increasingly focused on the great challenges of the 21st century, such as financing the global transition to clean energy, building resilience to climate shocks, and ensuring digital technology creates opportunities for all. It is working to mobilize trillions of dollars in private capital to meet these challenges, because it knows that official development aid alone will not be enough. Its unique ability to combine finance, expertise, and its convening power makes it an indispensable player in shaping a sustainable and inclusive global economy for the future. Ultimately, the story of the World Bank Group is a story of partnership. It is a partnership between rich and poor countries, between governments and the private sector, and between global experts and local communities. It is built on the simple but profound belief that we all have a stake in each other's success. By working together to reduce poverty and create opportunity for all, we are not just building a better world for the less fortunate. We are building a more stable, secure, and prosperous world for ourselves and for the generations who will follow. That is a mission that continues to be worthy of our collective support.